All right, let's bring in Kevin Green, a senior markets correspondent, to help set up some of the other action today and take a look at the broader picture as well. Let's start out with look at Apple. So Apple in focus today on news of some major spending they plan to do. Tell us some of the details about this, KG.
Yeah, we're seeing the shares down about 0.6% here, but this is kind of an update or a news story that's hitting the wire here regarding Apple investing around $500 billion over the next 4 years. Now, this is something that has already kind of been in the works actually since November of last year, but it does appear that they're kind of expanding or doubling down when it comes to the amount of money they're willing to spend, and they're really trying to focus on the manufacturing sector, and especially the AI sector here. They're going to be expanding over in Michigan, Texas, California, Arizona, and Nevada, among some other states when it comes to data centers, as well as a new factory in Texas. And that is going to really focus on the AI manufacturing side of the equation, kind of working with Foxconn and making AI servers. Now, they do believe that this is going to start around 2026. And once again, this is going to be in collaboration with Foxconn here. So once again, this is kind of one of these situations where they're trying to onshore some businesses, onshore some manufacturing processes, and that's also going to have a tailwind when it comes to the amount of jobs added. They are expecting around 20,000 jobs to be impacted by this. What's also very interesting is they're also going to be working with a university to actually create an AI-focused manufacturing academy, and this is actually going to be something that could be provided for free for students. So that might be another turn of events. You know, we usually see this with auto body work and things of that nature. Now we're kind of getting back into the AI space here, and that's actually a very interesting opportunity for young students that might be trying to get into this space. Maybe we see more of this down the road.
I think that piece of that, it actually is also fascinating, KG, especially in the context of conversations that we have with different executives who often talk about the skills gap between, the opportunities that are there and, we have this tight labor market, but they're not necessarily coming with the skills that are needed for the jobs that are there. So this looks like this is a pipeline to what the future is, essentially. Also, with this latest news, is it something that really Apple needed to do in the context of the tariffs?
You could make, I think you're probably seeing a little bit of a rebranding when it comes to the commitment for spending, right? And that is probably in order to obviously gain a little bit more favorability when it comes to the administration. And then also, not only when you're looking at the tariff talks, but also maybe some items that are currently in process, the DOJ that's being reviewed regarding their businesses. I mean, this morning, this is a separate story, but the SEC officially dropped that crypto case against Hood. So now you're actually seeing stocks like Google catching a bid. Google's up around $3 over the last 5 minutes because there might be more optimism that maybe these current investigations that are taking place may be dropped, and that'll actually be a little bit more favorable. So yeah, once again, they are already spending money. It seems like they're putting a little bit more in the ante in order to do this, and rightfully so. Their marketing team's doing a good job with trying to pair this up with the administration's initiatives in order to try to bring back or onshore manufacturing here in the United States.
All right, let's talk a little bit about Alibaba. We got Alibaba in focus today. Not helping the shares, but it looks like they're planning to make some investments when it comes to AI. What's the latest here?
Yeah, so we're seeing the shares down about 3.5%. Now, Alibaba is planning on investing around $52.4 billion in AI and cloud computing here over the next 3 years. Once again, this is another investment that they are trying to make because they are trying to command this space, or at least take some market share, especially when you're looking at the China market here. Now, the market really is not, doesn't really like this. They don't really like to see the spend. They had a really good earnings announcement and guidance as well. So why are you spending more money? I think that's the question. But at the end of the day, if they do believe that there is an opportunity there for them to continue to expand, they're going to have to put the investment in now. So we're seeing the shares kind of back off here a little bit, but a remarkable run over the last couple of weeks, if not months, for this stock that has been kind of forgotten by a lot of investors. So let's see if the market's going to be able to hold up here, and maybe some buyers try to step in, and we don't have one of these pops and fade type of situations like we've seen last year.
But wouldn't they need to? I understand that the market wouldn't like this spin, especially in the context of their latest earnings. But in order to keep up in the AI arms race, wouldn't they need to do this?
Yeah, I would agree, and I think that's one of the question marks when you're looking at the China market. What is the spending really looking like? What is the infrastructure looking like? Right, it's a little bit more integrated when it comes to government policies as well as approvals. So they're obviously making the investment on their own. But if they do believe that once again others maybe in the space are trying to look for areas or look for opportunities for compute, Alibaba could be that outlet for them. And I think that's really the strategy. It seems like they're kind of taking the Microsoft approach when it comes to trying to build out their AI infrastructure, and rightfully so.
And then, KG, I want to get your thoughts. I know you kind of do takeaways. I saw you had a LinkedIn post with some takeaways on where we are in the first quarter. We had a couple records last week with the S&P 500, finished lower on Friday. How would you characterize where we are so far this quarter?
Yeah, look, I think we're actually holding up pretty well, given the fact that January, February, and March are traditionally volatile months. And so we did have that sell-off on Friday, but we did hold a key area of support at that 50-day moving average, and hopefully we were able to gain a bounce here. What I did find very interesting, though, Diane, that I put in that note, is that dividend stocks last week, high-yield dividend stocks, did phenomenal. I mean, if you're looking at stocks like Danaher or Verizon or Dow, Merck for that matter, a lot of these stocks have been really aggressively oversold to the downside, and now their yields are actually looking fairly attractive. And if you're looking at an interest rate, 10-year yield that's stabilizing and or going down, you might continue to see some flows going into those high-yield dividend stocks as a place for safety and comfort if growth stocks like communication services or technology are taking a little bit of a hit. So keep your eye out on that one. I think that's very interesting, not only from a trading perspective, from an options perspective, but also from a portfolio standpoint as well. And then everything else, when you're kind of looking at demand factors right now, we're holding up, but we're not seeing anything that's been outsized to the upside when it comes to demand. So probably a lot of the commodities that we've been focusing on, gold, probably will remain in the ranges that they're in right now until we see some optimism either coming from China or the EU.
And then, KG, I know some of our viewers will get after me if I don't ask you this. Your levels that you're looking for today as support and resistance for the S&P 500.
Yeah, so you want to be able to defend 6,000. Once again, that coincides with that 50-day moving average here. A bounce back up to the upside above 60.50, or even if you can get a close above 60.60 for today, that would actually be a major win for the bulls because, once again, that retracement trade would continue to stay intact. And then we also have to just keep in mind, too, we had expiration Friday on last week. So there's a lot of volatility that's inherent with that. If we do see a breakdown, you do not want to really get below that 59.60-ish area. That becomes a little bit more of a cause for concern there, Diane. And we'll see what volatility is going to really bring us today. But I would expect maybe a little bit of a retracement or a relief bounce, at least for today. And unfortunately, we do have some other economic data points this week that might kind of reflect exactly what we saw Friday, right? Consumer confidence numbers on Tuesday, if that comes in lackluster, inflationary data, if that comes in a little hot, that could be a little bit of an issue. But I wouldn't be too concerned right now until we break that 50-day moving average.
All right, KG, with the levels to watch. Thanks a ton.